Welcome back to another edition of Build Your Legacy Insurance Edition podcast. Bill, what's going on, man? How are you?
Hey, I'm good. We've had a good night. You've been around for 2 days now.
Yeah,
so
2 days.
Good to have you here.
An extended stay in Jacksonville.
There you go. Yeah, that's right.
Getting into summertime a little bit here. Weather's getting warm, getting ramped up. School's almost out.
Yeah, everybody's starting to itch a little bit. I think whether it's a good thing for the kids or some parents we were talking to last night, and it was, I'm not sure I'm ready for summer and the non-routine that happens when people get out with summer.
Well, for me personally, summer is actually a good time because the kids sleep a little later and you can kind of get up and get out of the house a little easier. You're not chasing around trying to put flip-flops on or Crocs or book bags and all that stuff. So, I enjoy that little 2-month spell.
I would agree with you on that. I do enjoy it as well.
Yeah. So, well, hey, wanted to get in here today because I just watched the episode with you and Don.
Okay.
And, Don brought up a point that really hit home for me in reference to, taking dollars and take it. You got to have dollars to grow. And, within that conversation, it got me thinking about existing agencies that are, I'd say, on the larger side, right? And over my 9 years of doing this, I've talked to agents and their immediate reaction is, I've got all the carriers I need. I'm hitting contingencies with my companies and really wanted to talk about, sort of reopening the conversation around a partnership and why they really should look at it, because there's still value here for them, even if they are good set on markets, even if they are earning those contingencies. And a lot of it goes with that generation of dollars. So,
okay.
I know we've talked about the 5 layers of compensation.
Absolutely.
And we've covered that pretty heavily. But I really wanted to hit on a different piece with that, which is the stability.
Okay. Yeah, that makes sense.
And I think your dad, when he was talking about those dollars, that was where he was sort of going, was the stability that it creates to make those strategic reinvestments.
Yeah, and I think the stability can go in a lot of different ways for agencies. So, I mean, it's certainly a good point, maybe a good word that can see where it takes us.
Yeah, some different areas. The first piece there, we think guaranteed contingencies.
Right, stability of money.
Right. I mean, that's the easy, low-hanging fruit.
And I think it's a valid point that needs to be brought up over and over again, because as insurance agents and independent insurance agencies specifically, is that profit sharing time.
Yes.
You get emails, you start wondering halfway through the year, people try to lock in to try to gain some stability with profit sharing. So the carriers try to give some of that. But really, when you start the year, you have no clue what the year holds, weather-wise, loss-wise. So stability is out the window if you think about profit sharing.
And that's a great point, right? With the things that we've seen happen over the last few years, to your point, weather-wise, things like that can really affect the bottom line. And we've talked about budgeting in the past. As you're sitting there and you're budgeting out, if you've got that guarantee that you can forecast out, this is, hey, worst case scenario, I know this is going to be here. You can invest a lot more strategically, whether that's technology, staffing, marketing, whatever it might be, to help spur some growth in the business versus having to sort of wait and see.
Yeah, and I think we talked about this before too, is that stability also comes with quarterlies.
Yes.
And so it's not like you just have to wait 12 months to get that money that is going to be there for that stability. Is you're getting it quarterly. So if you do have that expenditure monthly or quarterly, you can pay for it.
Right. Yes. And that's a great point. You're getting that money throughout the year. You can count on it, and you can, as you say, right, you can pay for things without, in some ways, having to come out of your own pocket. But the other piece of that stability is, I think, from a carrier representation standpoint as well.
That's where my mind goes more than anything. And probably just because of the marketplace that we've been in the last couple of years, I feel like it's been very unstable.
Yeah.
There's been a lot of different things going on with the property world. I think we're seeing it starting to get better. I think the light is at the end of the tunnel, and it's not a train coming at us. I do think we're getting things in the right direction.
The spigot is turning back on.
Yeah. But, we have seen that. And so there's been instability of markets because of the way the market in general is.
Yeah, you don't know what's coming, where you haven't known what's going to happen tomorrow, whether it's a underwriting change, a carrier deciding to pull back from the marketplace for a period of time, whatever it might be. I mean, that's a great point.
Yeah, so I think, so we talk about that instability, but then it certainly want to bring it back to the stability that we were talking about here. And that is, you may think you have all the markets. As a larger independent agency, you may have all the markets today. And then something switches, and it's like a light switch, and now you're scrambling a little bit. And I think that's where we bring a little more stability to people, because we probably already have relationships with that next market. We can introduce you.
Right.
We can bring that stability back to you where it's not a full-on panic situation.
As they are today, they might have all the markets they need, but look at the M&A activity going on in the marketplace. You walk in, you've got an opportunity to hire somebody that might not necessarily do the exact same things that you do, but it's still a great investment for the business. To your point, we probably already have that relationship. We can help make that introduction. We can help you pick up that market. But the other thing that gets lost is with our partnership, you're able to add those markets without having to sacrifice another. And I think that's a huge thing, because it still protects those previous relationships you might have.
Yeah, and I agree. And I guess where I was talking, you're talking about let's add one.
Correct.
Right? I'm talking about one of the stabilities I think about is if you lose one.
Yeah.
And when you lose one, think about the rush that's in the market, because you're not the only person.
You're not the only one losing it. Yeah.
You're not the only one. So how many phone calls is that next player getting for that company? And just to have that relationship to probably jump the line of a lot of people, because that's what's happening. It's not just one person calling; it's 100.
It's 100. Yeah, it's a great point. You know, you're kind of jumping the line, as you said. There's a pre-existing relationship there that it's not a cold call. It's a warm conversion, if that makes sense.
That's right. And look, and we say we don't guarantee markets. We're not here to saying, hey, we're putting you there so you can get the person, but we feel like we can get that person, that marketing person, in front of you. Right. So you can tell your story.
You can sit down, have a conversation. You can get to know them. They can get to know you. And it's a much more relaxed environment, I guess is the best way to put it.
I think it's one of those two that you look at it with that warm introduction. Like you said, it's not that marketing person, that territory rep coming in and already kind of having their hands up.
Right.
Like, I know what you want. I know what you need. Everybody else needs what you need.
Yeah.
It at least is like, yeah, we know what you need, but let's talk and have a good, relationship and figure this thing out.
Yeah. How do we make it a win-win for us both?
That's right.
Yeah, I think those are the stability piece of it for an agency that's looking to go to the next level. That's the value. That it's not necessarily markets right away, or not not necessarily that you're not making good money as it is. It's how do we create and drive and create a stable environment for you to truly invest and go to that next level as a business.
Yeah, absolutely.
So, well, that thing hit yesterday when I saw that video, and I wanted to pop in here and cover this because I thought it'd be a good topic and something we can kind of build on throughout our continued conversations. So,
yeah, absolutely. All about the stability.
Yeah, it is. So, well, man, I appreciate it, and we'll see you here good soon, okay?
All right, sounds good. Thanks, Travis. Thanks for tuning in. You can catch our Build Your Legacy Insurance Edition podcast on YouTube, Apple Podcasts, Amazon Music, Spotify, or wherever you get your podcast. Be sure to subscribe, leave us a review, or send us over a topic recommendation at podcast@siaofnc.com. If you're interested in learning more about what we do, visit us online at www.siaofnc.com. We hope you enjoyed our newest episode. See you next week.